If you do not know exactly how to place a trade like this one using what I refer to as the shallow pullback strategy, then you need to watch this video. Pullback trading is one of the best and easiest ways to make money in any financial market. But if you cannot create a rules-based strategy around pullbacks, then you're just going to be trading based on a bunch of inconsistent crap and hoping to catch the next big move out of price. And your trading account is going to reflect that. There is not one consistently profitable trader that trades based around hope. But if you can master pullbacks and find a consistent way to trade them that makes money over time, then that might just be exactly what you need to take your trading to the moon. And that is why in today's video, I want to show you my top 3 pullback trading strategies in hopes that it'll help you get a little closer to your goal of becoming a consistently profitable trader. So if that sounds like something you'll enjoy, make sure you do a couple of things for me. Go ahead and smash that like button to help out with the YouTube algorithm. Go ahead and hit subscribe if you are new, because we come out with content like this each and every week. And I'll see you right after the intro and disclaimer. So the first thing we need to discuss when we're talking about pullbacks is go through a brief explanation of what pullbacks actually are. So in a trending market, what we will see is something like what you see currently on the screen right now. And what we see in a trending market are impulsive moves like this one, followed by brief periods of exhaustion, retracements, a little bit of relief from that impulsive move. These are called pullbacks. These pullbacks can be caused by either sellers trying to step in from this area thinking they can push the market even further down, or by buyers that were in on this move taking some profit. But inevitably, if this trend is going to continue, then we will see this trend make a higher low followed by a higher high that will yet again be followed by the same thing. It'll be followed by buyers taking profit, sellers trying to step in and push the market further down, and that will cause another pullback. These are what we call the pullbacks in the market. Now, pullbacks come in a variety of shapes and sizes, but there are 3 main pullbacks we're going to focus on today. They are the shallow pullback, and we're going to talk about strategies for today. They are the shallow pullback, the medium pullback, and the deep pullback. So first off, a shallow pullback. Let's start with that one. A shallow pullback is this one you see right here. It's exactly what it sounds like. It's a pullback that's not big. It's a small retracement. And the way we're going to define a shallow pullback is if a pullback does not reach the previous resistance level before the market breaks into new highs, then that is considered our shallow pullback. I'm going to breeze through this pretty quickly. We're going to look at it on a chart, so don't worry if you get a little confused during this brief explanation right here. What would a medium pullback be? A medium pullback is after we see the breaking close above a high. We see our impulsive move here. We see our pullback, and that pullback comes into the previous level of resistance. All of these are going to be based around price itself. So whenever this pullback makes it down to this level of previous resistance or support that was broken, depending on the trend. This is an uptrend, so it's going to be previous resistance turned to support. This is going to be our medium pullback. And a deep pullback is when the market breaks into new highs, like we have right here from our previous resistance level, breaks into new highs, higher high right up here. And then the pullback makes it all the way down to the previous support level of the previous pullback. So let me explain that really briefly. Here was our previous pullback. Here's the lowest level of that previous pullback when price breaks into new highs and then retraces all the way back down to that lower level. That's what we're going to call a deep pullback. So what we're going to do today is discuss a strategy or strategies you can use with all 3 of these pullback types. So let's dive into that first by talking about the shallow pullback strategy. So here we are on a whiteboard, and I'm going to briefly go over the shallow pullback strategy. Then we're going to take a look at it on some charts, and we're going to dive deep into all the rules around this strategy. So with the shallow pullback strategy, what we're waiting for is to see a pullback that does not touch the previous resistance level that was broken in an uptrend. We'll go through bearish examples as well. But if we get a pullback that does not touch that previous resistance level at all, then what we have is a shallow pullback. On shallow pullbacks, the best way I have found to trade them is by trading breakouts of this resistance level after that pullback. So that pullback happens, we don't touch the previous resistance level, the market pushes higher, going into higher highs. As we break out of this previous resistance level here is when I want to start looking for trades. I'm looking for those trades based on the close of the breakout candle. Again, I'm just trying to show you the concept. We'll go down to charts and talk about it in just a second. But as long as this stays true, I want to buy that. My stop loss is probably going somewhere below that swing low with a target at like a 1-to-1, 1.4-to-1, 2-to-1, whatever we decide to do for targets. And with this being the case, try to spot as many of these shallow pullback strategies that you can. I've actually already pointed them out for you. Hopefully you already saw this. As this market starts to push down, we create a low, a lower low. Right here's our lower low from our previous low. And now when we get this pullback, does it touch our previous level of support? This would be a bearish example. It does not. So how would we be trading this? We would be trading the breakout of that support level right here. The breakout of that level since this resistance level, since our pullback did not make it back up to the previous support level, that's signaling that we need to trade breakouts. And again, we're going over all the rules in just a second. One more example right here though. We break above resistance, the pullback doesn't make it to that resistance, therefore I'm trading breakouts of this level, expecting new higher highs to form. Okay, so now let's go over to some charts on the dollar yen and take a look at some real examples of this on some real charts. All right, so on the dollar yen right in front of you, we have a bullish example of the shallow pullback strategy. See if you can spot it. Hopefully you were able to spot this shallow pullback right here. We have a market breaking into new highs. We have a high, a pullback, a brand new high, and this pullback does not touch this resistance level at all, right? And then we see a breakout of this resistance level. So to explain the entire entry format, that was the conditions. When we're building a strategy, and again, you want rules around all of your strategies. When we're building a strategy like this, we want to have conditions and entries. Our conditions, and we want to have stops and targets. This is what I call CEST. But our conditions are already set, right? We have a condition of we want to see a pullback that doesn't touch the previous resistance level for a bullish shallow pullback. What's our next step? If we're doing CEST, it's our entry. So let's discuss the entry now. The entry, after we see that shallow pullback that does not touch the previous resistance level, is a close above the body of the previous resistance level. The breakout candle that closed, not the high up here, but the bodies of the candles of that swing high. When I get a break and close candle, like this big green one here, above this line, our bodies of the previous swing high, that is my entry candle. So our trade setup at this point, if I bring out my position tool, would look like that. We would have a stop loss below the swing low. And there's a couple of ways we're going to talk about stops and targets. We'll do that momentarily. Stop loss below the swing low. Let's say we wanted a 1.4-to-1 reward to risk ratio. That's what I constantly go for, or go for a lot in my own trading strategies. So that's our trade setup. Let's see what happens. We push down. Do not hit our stop loss though. We then continue pushing higher, higher, and eventually hit targets here on this shallow pullback trade. So that is a bullish example. Let's now go take a look at a bearish example, and then I'm going to show you some testing I've done with this throughout 2021 on the dollar yen. First though, let's look at a bearish example of the shallow pullback strategy. We are again on the dollar yen chart. See if you can spot a bearish shallow pullback. Hopefully you were able to say this one. Why? Because this pullback does not reach the previous level of support that was broken. So we're looking at that previous level support. We want to put a line on the wicks of the lows of this level that shows us the lowest low of that previous level of support. And as long as we get a move that breaks through that low, and the pullback after that impulsive move that breaks through that low does not touch this area, then we have a shallow pullback. When we have a shallow pullback, we're going to be waiting for the market to break and close below the bodies of the swing low before that pullback. So with that being the case, where would our entry candle be? Right here, right? So we would have an entry that looks something like this. Entry on the close of that candle, stop loss above the swing high, right there, 1.4 easily hit. And I want you to look again now and see if you see another shallow pullback. So what we're counting as a pullback with this exact strategy is just one candle pulling back. So hopefully with that being the case, you were able to spot this. What we have is a push down. If we count this as our pullback, we got nowhere near our previous low. So with that being the case, we can put a horizontal line at the bottom of the bodies of that swing low, making this our entry candle and making this another winning trade with our entry at the close of that candle, stop loss above the swing high of that candle, and targets down here. Now, I'm going to explain stops and targets in a second, but I want to show you guys the results from the beginning of 2021 here on the dollar yen, trading exactly what I've just shown you. Again, we're going to go over stops and targets in just a second. Then we'll move on to the other two pullback strategies I'm going to teach you in this video. Let's go ahead and move on now, though, to the results of 2021 on the dollar yen. Okay, so here we are taking a look at the results from 2021. This is just how it performed in 2021. So before we even get started looking at these results, you need to go and backtest. Once I give you the stops and targets, do not just take that, go out and start trading it. You will likely, and I mean very likely, lose money. The reason is because you don't have this optimized in any way. You don't know what pairs it performs best on, what time frames it performs best on, what time of day it performs best on. You have no idea about any of the nuanced rules I don't have time to go over in this video that you have to put in the work to figure out throughout your backtesting process. You don't know the max drawdown it comes with, the max losing trades in a row. There is so much more that goes into trading than what most beginners think, which is why I want to explain that before I even show you these results. And also, when I show you these results, understand the dollar yen is a pair known historically for trending really well. Understand that in 2021, we've had very trending markets so far. And this, my friends, is a trend continuation strategy. I say all that to make sure you understand that you need to do your own back testing whenever you see strategies from me or anyone else. You may just not be as, and I'm not going to say as good, you may not see the market the same as me in terms of swing highs and lows. That could affect the performance of this strategy as well. But this is the results I've gotten with this strategy throughout 2021. And I'm showing you the best pair in terms of the results I got in 2021. That's the dollar yen. Now let's dive into the results. So here on the dollar yen, throughout 2021, I used a 1.4 to 1 reward to risk ratio. I had 18 wins, 11 losses, giving me a 62% win rate and a 28.4% ROI, excluding spreads and commissions. So pretty much in the year of 2021, this type of trading has performed really well. Again, 2021 has been insanely trendy so far, but again, that's why I want to make sure you understand that just because you see really good results like this, it doesn't mean you can take this, go start trading it even after I give you the stops and targets and expect to make 62% win rate all the time. Okay, go do your own testing. I am not here to give you the castle. I'm here to give you keys to the castle, like strategies like this one, and it's your job to go find the castle, to go back test. That was a weird analogy, but to go back test, create your risk management plan based on your risk tolerance, do all the things that professional traders do. If you want to be a professional trader, you know what you should do? Start acting like a professional trader. Do you think professional traders just go out here and start trading because they learned a strategy on YouTube and that's what they want to do? I can tell you from experience, no. 2 hours of my day right now as a professional trader that makes a lot of money from trading, 2 hours of my day is still spent backtesting strategies and optimizing the strategies I already have. It's not the dream lifestyle everybody's selling when they're trying to sell you a course and telling you you're just going to the Lamborghini dealership every other week to buy your new car and you're going on vacation every week. I don't know what these people are really doing, but as a professional trader that has an education business, TTC, the trading channel, as well, I could never find the time to even go to the dealership if I wanted a Lamborghini. But anyway, I digress. Those were the results. Let's now look at a few of the trades randomly so that I can show you a couple of other examples and show you that each of these was based on exactly what you're learning in this video. So here we have a winning trade. Also, right now we're going to talk about stops and targets. Here we have a winning trade. Can you tell me why? Actually, let's look at this losing trade first. So here's a losing trade. Let's take a look at it and see what happened. We had what? We had a breakout of this level, pushing higher. We then have a pullback that does not come down to these highs, right? With all of that coming together, our breakout, our pullback, not reaching the highs of our previous resistance level, what is the way that we trade now? The way we enter is by the breakout candle that closes above the bodies of the swing high candle. That would be right here. So in this case, this is what our trade setup would look like. And let me go ahead and explain stops and targets while I'm here. So after the entry, my stop loss, I kept things very, very simple, is 1 ATR below the entry candle for a bullish trade and above the entry candle for a bearish trade. One ATR. And if you don't understand what ATR is, it's average true range. I have a full video on it up here. Essentially, it gives you the average movement of the last 14 candles. That way you can stay in line with the currency pair volatility, the volatility of the currency pair time frame and market that you're trading. So with this being the case, the ATR of that candle, which you can see if you look right up here, is our entry candle is 12 pips. So I would have a stop loss below this candle by 12 pips. If I go to the low of that candle, it's 17 pips. I add my 12 to that. I have 29 pips as my stop loss. And I would have a 1.4 to 1 reward to risk. That's the way I traded this, just based on that stop loss, is a 1.4 to 1 reward to risk for the targets. So that's what the trade setup would look like. As you can see, this ended up being what? A losing trade. So instead of showing you this next win, I actually want to show you a bearish example of stops and targets. So let's go to our next bearish trade and take a look at that. I'll just go ahead and scroll out so I can see it. A lot of uptrends here. Okay, next bearish trade ended up being a loss too, but that's okay. You guys need to understand, even though I'm showing you stops and targets and you're seeing losses, you need to understand that you're going to lose sometimes as well. That's part of trading. So let me move our vertical line out of the way really quickly and see if you can spot this bad boy. Where's our shallow pullback? We have a push down, breaking below previous support. Here's the line of our previous support level. I know that looked like it touched it, but it did not. So since our pullback from our swing low up does not touch the previous swing low, what does that mean? That means we have a shallow pullback. And if we have a shallow pullback, according to the rules of the strategy we're talking about right now, we're trading the candle that closes below this body. The body of the lowest body of the previous swing low. That candle happens to be right here. So our entry would be at the close of that candle, and our stop loss would be 1 ATR above this candle. 1 ATR above there. So the ATR right now is 13 pips at the time of that candle. Up to the swing high, we have about 13 pips. So it'd be a 26 pip stop loss. As you can see, we are barely stopped out before. Again, our target's 1.4. This is just what it would look like on a bearish trade. As you can see, those stops hit before the market took off, barely, and the market then takes off to the downside. Although we were out of the trade, would have hit our targets if we would not have seen this price move. But guess what, guys? That happens in trading. You're going to have losses. Your job as a trader is not to win every trade, is to set yourself up with a statistic advantage where you can make money over large sample sizes over a long period of time. That's what we're going after as traders. So that was the stops and targets and the entire strategy for the shallow